How you doing, guys? This is gonna be an explanation of how to short stocks in the stock market and how does it actually work and what actually shorting means. So let's jump right into it. You all know what it means to buy a stock at a certain price and then sell it at a higher price for profit, right? Let's say Apple is at $100 per share. We're just gonna use that random number, right? And then you buy it at 100, hoping that maybe it'll go up. It goes up to 120, then you sell it, and now you're making 20 bucks per share. That's if you're going long. That's what people usually say when you're going long. It's when you're buying low and you're selling high. When you're shorting a stock, you're actually selling shares without having them on your hands on the first place. I know it's difficult to understand, but just keep watching. Here's an example. This is Timmy. He wants to short a stock. Let's say Apple is at $100 and he believes the price of Apple will drop. On the other side of the screen, someone else wants to buy shares of Apple at 100. This could be anybody. So Timmy asks the broker, in my case, I use Webull to trade stocks. He asks the broker to lend him 100 shares of Apple so that he can then sell them to the person on the other side of the screen. Are you following so far? Okay, so Timmy takes 100 shares from the broker, in this case Webull, and he takes them and he sells them to the other person on the other side of the screen. 100 shares of Apple for $100 each. That means about $8,000. Now Apple ends up dropping to $80 a share. Remember, he has to return those shares to the broker. So he goes out in the market and he's like, well, I need 100 physical shares to give back to my broker because I grabbed the ones they gave me and I sold them. Now they want the shares back, so I just need to go buy them again. So he goes ahead and he buys them at low, at $80. So he's like, okay, can I have 80 shares at 80? Sure, here you go. Okay, and then he goes to his broker. Here you go, Webull. You lend me 100 shares of Apple? Here's 100 shares of Apple. It doesn't matter how much those shares are worth. They lent him 100 shares. He's returning 100 shares. I really hope you're following. So we're gonna look at this quick chart to see what happened in this scenario and how he actually ended up making money. So as you can see here, first he grabbed 100 shares from his broker. Those shares went to Timmy. Then he sold them to somebody in the market for $100, right? And then he needs to return those shares, so he goes back into the market and he buys them for 80 bucks, right? And then he returns those 100 shares back to the broker like nothing happened. But in reality, he made 20 bucks per share, which in this case would be $2,000. Now, I really hope I was able to explain this right, because I tried to explain this to a friend of mine and he could not understand it. And I remember back in the day when I first got introduced to this subject, I could not understand it at all. So I really hope I did a good job here because trust me, it's a simple subject. I think the problem is with the mechanics of how it actually works physically in your broker, let's say on Robinhood or Webull, how it actually works. Not this subject. I think everybody understands shorting means you're betting that the stock will drop, but it's pretty much like, how does it actually work when you click stuff, right? So if I still was not able to explain it correctly to you personally, leave a message down below. I would like to know where I'm doing wrong with this explanation, and maybe I could explain it in the comments a little more. But yes, I hope this was helpful to you. Stick to this channel, subscribe if you like to see more content like this. I trade stocks every day. I will probably start uploading more content on stocks and the stock market in the future. So stick around if you like this type of content, and give this video a thumbs up if you thought this was useful for your journey. You have a good day.